Senator Barfoot,
Should I mention her?
Senator Carnley, Senator Coleman, Senator Elliott, Senator Hatcher, Senator Hovey, Senator Jones, Senator Kitchens, Senator Livingston, Senator Price, Senator Roberts, Senator Singleton, Senator Smitherman, Senator Wagner, Senator Woods, Senator Williams, Senator Shellnut.
We have 15 members present. We have a quorum. The clerk will call the first bill.
SB 170 by Senator Roberts.
All right, committee members, Senator Roberts had to attend a funeral in Birmingham, so I'm going to carry this for him. This is SB 170. This bill would establish a safe harbor that would protect the approximately 530,000 Alabamians as well as future Alabamians who manage a portion of their health care costs with a health savings account from future state insurance benefits mandates that conflict with federal SHA law. If anybody has a question or concern, we have some experts here. Please don't ask me.
Will you bring them up, Mr. Chairman?
All right.
I got what you.
All right, Senator Smith has some questions.
Thank you, Mr. Chairman and members of the committee. I'm Meredith Wills, the Government Relations Manager at the Department of Insurance.
What is this? Let's go on with that question. What really is this? What's this?
Yes, sir. This is the National Coalition of Insurance Legislators model that's been approved in about 20 states nationwide, and essentially it protects those that contribute to HSA's health savings account. It protects them from any federal or new state mandate that might take away the definition of, say, a high insurance deductible plan. It's an insurance, it's a safe harbor so that you won't lose that money in case the definition of a high savings plan were to change.
When you say lose it,
Well, with the big beautiful bill, the definition, there's a way. Sorry. Yeah, that's it. It's just protecting your pre-tax HSA dollar. Well, it's just in case their definition were to change.
I understand what you're saying. Now, I think this is my comment, Mr. Chairman. If that's what it does, then I think that is a good thing. I just hope that we as a body, the way I think that you are probably going to embrace this bill, would embrace that concept for this legislature, and that's simply this. The conversation is not about the bill, it's not about likes or dislikes. The conversation is about how we gonna fill every one of these holes before we leave here that it may create, like this situation right here. That's what this is for. That's what he's trying to make sure that if that creates a hole that damages that aspect, that will not take place. So I'm saying that to everybody sitting in here, when we deal with our budgets and stuff like that, just be ready for it. You did it last year. Thank you very much. You got 16 million so the children could eat. Y'all remember that? Okay, so that was a hole that was created. We filled it. We got some holes this year we got to fill. So before we start being Santa Claus with all these new $90, $80 million projects we everybody wants to start doing, let's make sure we fill these holes that's been created on both sides of our ledger. So this was a great opportunity for me to share it with my colleagues. I plan on sharing it with all my colleagues when I get an opportunity. But I think that is very good at that aspect of addressing that aspect so that people won't lose something, regardless of what the bill does or doesn't do. Thank you.
All right, I have a motion by Senator Williams and a second by Senator Hatcher. Let's get let the clerk call the roll. Let's get a good roll.
Senator Barfoot.
Aye.
Senator Carnley.
Aye.
Senator Coleman.
Aye.
Senator Elliott.
Aye.
Senator Hatcher.
Aye.
Senator Hovey.
Aye.
Senator Jones.
Aye.
Senator Kitchens. Senator Livingston.
Aye.
Senator Price. Senator Roberts. Senator Singleton.
Aye.
Senator Smitherman,
Aye.
Senator Wagner, Senator Woods, Senator Williams, Senator Shellnut,
All right, SB 170 receives a favorable report. Moving right on to the next one, SB 177, Senator Coleman Madison, welcome.
Good morning. Thank you, Mr. Chairman, and members of the committee. I will try to be brief. SB 177, first of all, it's already passed the House. It expands its insurance coverage for breast cancer screening for diagnostic imaging, for women that may have,
Second.
thank you.
We have an amendment that Senator
Oh, yes.
Barfoot, I believe, is going
We
to.
have two amendments that was put on the House.
Okay.
Who has the other one?
Senator, Mr. Chairman, do you have a copy of the amendment that I'm gonna offer?
I believe I do, yes, sir.
It's, I believe a friendly amendment. Senator Coleman Madison and I spoke about it a little bit earlier today. It is just an amendment that clarifies the language to ensure that physicians follow the cancer guidelines in their screenings and I'd offer that.
Second.
amendment.
I second.
All right, I have an amendment offered by Senator Barfoot, second by Senator Smitherman, using previous role with no objection. So the amendment is adopted. We have another amendment. I believe I have it. Yeah, this one, all it does is change the effective date from become effective January 1st, 2027. That's all this again.
I move.
Have a motion and a second. A motion by Senator Smitherman, a second by Senator Hatcher, using previous role, no objection. So the second amendment is adopted. Now moving on to the bill.
Also, I would renew my second. I think he renewed his motion.
All right, have a motion by,
Yes.
as amended, Senator Singleton, a second by Senator Smitherman, using previous role, if no objection. Add Senator Price to the roll in the affirmative. So SB 177 receives a favorable report. Thank you, Senator
Thank you,
Coleman
Mr.
Madison.
Chairman. Thank you.
Yes.
Thank you. I know we're trying to move along. I just want to thank the gentlelady for bringing this. Much needed in our state. Going to save lives with this. And again, just want to go on record and say thank you.
Thank you for your vote.
Thank you, Senator Coleman Madison. That's mine. All right, next bill, SB 207 by Senator Shellnut. This has to do with captive insurance. Currently, the minimum capital requirement for a pure captive insurance company is $100,000. A captive reinsurance company is $10,000. A protected sale captive insurance company is $100,000. A risk retention group is $500,000, and there is no minimum capital requirement for a branch captive insurance company. This bill would increase the minimum capital requirement for a pure captive insurance company to $250,000, a reinsurance captive insurance company to $500,000, a protected sale captive insurance company to $250,000, a risk retention group to $1 million, and would provide a minimum capital requirement of $250,000 for a branch captive insurance company. The bill makes certain other amendments regarding the organization and application process, requiring captive insurance to do business with a bank in this state, to require background information for persons controlling 10% or more of the captive insurer, and to require notice of any material changes in the items requested. If there are no questions.
I have one.
Oh, I have a question. Senator Smithman.
It's more of a definition more than anything. Please tell me what exactly is captive insurance?
All right, you're back. Come on.
Thank you, Mr. Chairman. I'll try not to get flustered. A captive insurer is basically, it's really a tax shelter for these, for parent organizations. So, does that make sense? Is that
I don't understand what you're talking about. That's why I asked. I still want you trying, but I'm trying to get it.
Yes, sir. It is a pool. It's set up to manage a specific risk. So, I mean, there are all kinds of them for property, casualty insurance, you name it. So they insure a specific. So they're common along the coastal lines because Maine and big insurers aren't sometimes exclude coverage for those high risk areas. So that's one example.
So this deal is for areas.
Yeah.
The coast. It's the Coles bill, okay?
I think a better way to explain it maybe is it's a form of self-insurance basically.
Okay.
And so. you know,
I get it when he said that, I get it 100%.
Thank you, sir.
Thank you.
I have a motion by Senator Williams. Before we do that, I have a amendment I need to offer. It says replace line 165 on page 6 with the following. Insurer, except in the case where a captive insurer has contracted with its parent or its affiliated companies or controlled unaffiliated business for captive management services.
Mr. Chair,
Yes,
what's the net impact of the amendment that you have? I'm still trying to get to the page.
that's a great question. Come on, Michelle, back on. Meredith, sorry.
Yes, ma'am. Okay, will you read the question again, sir?
It was just, he has an amendment, I was still trying to get to the page.
Yes, it's
And I
page
just-
6.
And I wanted to know what was the impact of the amendment.
I wish I had the bill in front of me, but this amendment, this amendment, let me pull to it, so say, a association has, that's the parent organization. So the captive, it basically allows the president of a association and to remain the president of that and their captive.
And why do we need to do that?
In case a president of an organization, sorry, in case, so that a president of an organization would not have to step aside in order to still have that captive.
There's so many more questions,
Thank
you.
All right, so I'm gonna make a motion, we carry this bill over, so we get some more information, so, do we have a second?
I have my general counsel here, if you would like to ask him.
I have a second by Senator Williams, we're gonna carry SB 207 over, all those in favor say aye.
Aye.
Any opposed? Thank you. Moving on to the next one, SB 208, by Senator Shelnut. All right, Sean Strickler. Come up, I'm gonna put you on the spot. Come on, this is your bill, it's pretty simple.
Mr. Chairman, members of the committee, I thank for this unexpected opportunity to address you this morning. A very simple piece of legislation. Basically, what this does is it removes electric cooperatives and electric membership. I represent Alabama Rural Electric Association. My apologies. 22 electric cooperatives throughout the state that provide power to the rural areas in the state of Alabama. When they were created, electricity was a newfangled thing that people were a little bit afraid of. They didn't know that they were going to need it or want it. It's kind of become important now. Everyone really likes it. When it was created, the cooperatives were created in 1935, they were put under the finance department for any indebtedness because they were worried that people might have the member owners get bankrupted out there. We have proven over time that we are quite responsible with the indebtedness and the funding that we do out there. In going under the Department of Finance, so they've done a phenomenal job with everything they've done. It becomes cumbersome and makes it to where cooperatives, for any loan they might fill out, even for something as small as a bucket truck, cannot use local means or other type of financing. They would have to use big financing because it all has to go through and be approved by the finance department. This simply would take electric cooperatives out of that so that they could be more agile, nimble with their indebtedness.
I got a motion by Senator. Oh, you jumping the gun there, aren't you? Senator Hovey, second by Senator Livingston.
Mr. Chairman.
I have a question, Senator Singleton.
Yes. You know, these electric cooperatives are already not regulated by the PSC or anybody else. So now they want to come from under the Department of Finance? Is that what you're asking?
The only thing that the finance does is looks at any indebtedness out there.
Because you're passing that bill on to me. I'm on an electric co-op. These are some of the highest co-ops that are out there. You know, I live a single man by myself, get an $800 bill a month sometimes. Yes. And, you know, I really want to put a bill to put them under the PSC. And somebody can regulate these guys because, you know, I know they buy electricity from other folks, but I'm just not happy. I don't know if I want to just let them slide from somewhere else because that bucket truck cost might be slid on over to me. So I don't know what it's actually doing. So I'm a respectfully vote no against this.
All right, so I have a motion and a second. Clerk, call the roll. Let's get a vote.
Senator Barfoot.
Aye.
Senator Carnley.
Aye.
Senator Coleman.
No.
Senator Elliott.
Aye.
Senator Hatcher.
No.
Senator Hovey.
Aye.
Senator Jones.
Aye.
Senator Kitchens.
Aye.
Senator Livingston.
Aye.
Senator Price.
Aye.
Senator Roberts. Senator Singleton.
No.
Senator Smitherman.
No.
Senator Wagner.
Aye.
Senator Woods. Senator Williams. Senator Shellnut.
Aye.
All right, SB 208 receives a favorable report, 12-4. Next up, SB 215, Senator Melson. I saw him somewhere. Welcome, Senator Melson.
Thank you, sir. This bill is a straightforward bill. A few years back, we required that if you were.
They can't hear you in the back. Thank you. They want to hear you.
I want to hear you, Senator Melson.
Thank you, sir. I was just saying, a few years back, we passed a home builder's bill that if you're building a home that the purchaser has the right to know whether you have insurance or not. So he signs off on the form that he does or doesn't, and then he gives it to you so you're aware of that your builder does not have insurance or he does. Well, the home builders would like to change that to say that if you are somebody that is providing insurance, that you can just do it with DocuSign. If you don't have insurance, then you still go to him and talk to him and get a signature in person with a witness.
Move that report.
In favor by Senator Elliott, and a second by Senator Price. Call the roll. Clerk, call the long roll.
Senator Barfoot.
Aye.
Senator Carnley.
Aye.
Senator Coleman.
Aye.
Senator Elliott.
Aye.
Senator Hatcher.
Aye.
Senator Hovey.
Aye.
Senator Jones.
Aye.
Senator Kitchens.
Aye.
Senator Livingston.
Aye.
Senator Price.
Aye.
Senator Roberts. Senator Singleton.
Aye.
Senator Smitherman.
Aye.
Senator Wagner.
Aye.
Senator Woods. Senator Williams. Senator Shellnut.
Aye.
SB 215 receives a favorable report. Thank you, Senator Melson.
Thank you, Mr. Chairman. Glad you're feeling better.
Barely, a little bit.
Aye.
Next up is HB 27, Representative Brown. Welcome.
Thank you, Mr. Chairman. Members, this is House Bill 27. This committee actually passed this bill last year. It just didn't get on the floor. What we're doing is, right now you can have catastrophic insurance accounts that are tax-free, and you have to use those for your deductible on catastrophic events, wind and hail, flood, those sorts of things. And all this will do is it'll just allow those homeowners to use it for fortified roofs as well.
I have a question first, Senator Smitherman.
So is the addition just the roofs? Some catch-on clause with the addition? I know you're telling us the roof, but you understand what I'm saying?
Yeah, yes, sir, Senator.
So
No,
can you tell me that?
it's just fortified roofs.
That's all?
That's it.
I mean, in addition to whatever they.
Right. You can,
Oh, okay.
you can use it for your deductible after a catastrophic event, like you have a flood or what have you. But then this allows you to actually use it for a fortified roof.
Where's your district?
I'm 105, I'm South Mobile County.
Oh, yeah, you don't specialize in the roofs.
The wind
We had
there,
to pry some roofs up and down there in Mobile, come on up my area, we had to pry them up and down there.
yeah, that's right.
We got
I
it.
see no further questions. I have a motion by Senator Barfoot and a second by Senator Hatcher. using previous role, if no objection. Seeing none. HB 27 receives favorable report. Thank you, Representative Brown.
Thank you, Chairman. Thank you, members.
All right, next up, SB 219, Senator Kitchens.
Thank you, Mr. Chairman. This is another Department of Insurance bill, and what this does is it really just consolidates the funding, codifies where we're not having to have another pass-through organization dealing with service contract providers. If there's any questions, I know we have Department of Insurance here also.
I mean, when you said not pass through for us provide, what you meant by that?
Yeah, so right now it goes to another fund, so this will consolidate it. I believe there's it's the State Treasury Fund. And this would go into the Special Examination Revolving Fund instead. So there's about $70,000 in that State Treasury Fund right now, so then this would go directly into the Special Examination Revolving Fund.
And what's that purpose of that fund?
We have the Department of Insurance here. They can explain the funding of that, or our esteemed chairman that handed me this bill when he was sick last week to pass it over to me.
I know I'm asking a lot of questions about stuff, but I bet you anything. Let me pass the sheet around and we might give you an exam. I bet half the folks don't know what I'm asking in here. And if you say you do, I'm gonna pass the sheet in front of everybody and tell you. So don't say nothing, you don't wanna be on the spot. So that's so serious. If I don't understand, I need to understand. I have to say that because I asked a lot of questions and some folks might say, well, I'm ready to do it. No, I wanna know what I'm voting on and what it does, and if I don't know, I'm not too proud to say, look, tell me, because I don't know. So if somebody can explain to me.
Senator Elliott.
Brandon, could you pop up here real quick and see if you could help us with that? Thanks.
I think Meredith could handle this one. I'm happy to, Senator. I'm Red Norman from the Department of Insurance. We have about a dozen special funds that do various things for the Department of Insurance. We have two primary funds, the Insurance Department Fund and the Examination Revolving Fund. So those things that the examiners handle, like examining insurance companies, examining service contract providers, that's handled through the Examination Fund. This one has about, I think he said $70,000 a year in it. So it handles about a half of an employee. The way the state makes us set it up, we have about a half of an employee's funded through this. That employee's funded otherwise through the Examination Revolving Fund. So we just thought this would be a chance to get rid of one fund and consolidate it into the fund that's actually providing the funds for this.
I got you. Okay.
Thank you.
I have a motion by Senator Williams and a second by Senator Jones, using previous role, if no objection. Seeing none. SB 219, Senator Kitchens, your bill receives favorable vote. Thank you for handling that for me. All right, before we move on, I have been told we have a bunch of bankers from all over the state. If you would stand, if you are a banker from, oh, they're in the overflow. We didn't let them in the room. Oh, there's some of them in the back. Welcome to the Alabama Senate Banking and Insurance Committee. We have a bunch. They're all in the background, that can't be seen. All right, moving on. Thank you for coming. All right, next up we have SB 247, Senator Jones.
Thank you, Mr. Chairman. This is an insurance bill, committee members, but really it's a Keep Jobs in Alabama bill. The reason I say that, the health insurance industry is seeing consolidation across state lines. So we've dropped from Blue Cross and Blue Shield, for example, 77 plans around the nation in 1990 to just 30 today. And so it's really, a question of, are we gonna possibly acquire another state, or are we gonna be acquired, right? And so if we're in a situation to do the acquiring, then we keep those 4,000 jobs with Blue Cross in Birmingham and Alabama instead of shipping them to Mississippi or somewhere else. So it allows Blue Cross to form a holding company, doesn't change anything else, and they would have already been able to do this if they were organized under Title 27, but since they're a nonprofit, they're under Title 10A, but they're subjected to most of the requirements under Title 27 anyway. So this just allows them to do something that they otherwise would be able to do, important for keeping jobs here in Alabama.
Mr. Chairman.
Senator Smith.
If I can make one comment and then move on to another area. Mr. John, you good, hey man, you on top of that stuff. You laid it all out there. I mean, really, that's what it does. That's one of them I had a chance to really read. And you just laid it out there. I'd like to move a favor report. So I want to keep these jobs right in where we are And I want us to be able to suck up another one of them companies, get it out of Texas, take it from them, bring it to Alabama.
I'd have a motion by Senator Smitherman, give favorable report, second by Senator Hatcher, using previous role, if no objection. Seeing none. Thank you, Senator Jones. SB 247, receive favorable report. All right, committee members, I just want to let you know the next two, we're having public hearings, but we are not going to vote on today. Just wanted to make you aware of that. So first up, we have you have the sign-up sheet? Okay. SB 232 by Senator Stewart. Senator Stewart, there you are. Welcome.
Happy birthday, man.
Right.
Oh, hold on. Do we need to sing to you?
Yes, please,
yeah.
If I could sing, I would do it, but I'm not going to embarrass myself.
Yes.
Everybody might leave if I start singing.
Good morning, Mr. Chairman, and it is an honor to address this august body here today. This is a good bill, y'all. Tough crowd. This is a simple bill and not a radical rewrite. So I just want to lay the foundation that this bill is very limited in scope. SB 232 explicitly authorizes Alabama volunteer fire departments and volunteer fire rescue squads to manage their funds in federally insured financial institutions, which include credit unions. Under current Alabama law, volunteer fire departments and rescue squads are allowed to deposit funds and conduct financial transactions with banks and cannot do business with credit unions. The current restriction in law presents challenges for volunteer fire departments in rural areas. So what this bill does, it addresses, this is not an anti-banking bill. This is a bill that addresses the limitations of the rural ecosystem. SB 232 would allow volunteer fire departments to place their funds in any financial institution that is federally insured, which means that VFDs would have the option of doing business with banks that are federally insured by FDIC or credit unions that are insured by the National Credit Union Administration, NCUA. If this bill were passed into law, Alabama would join nearly 30 states, that's 30 with a T. Come on, lighten up, people. That currently allow this type of public entities the options of using a credit union for financial services. You may hear a lot of back and forth between banks and credit unions, and you may even hear some unfounded leaps about credit unions not paying taxes. But this bill is not a rivalry between businesses. This bill is aimed at helping rural Alabamians, because the majority of our state is rural, and volunteer fire departments and rescue squads, giving them the option to compare rates, bank locally, and be the best stewards of their funds. And I understand that VFDs are public entities, but they receive a lot of private funds. They have to fundraise to make their money. They have to have fish fries. I know because I've been to the fish fries. They're great in Lowndes County and among other places. And, you know, this would allow credit unions tend to be more accessible in rural communities. And so I just want to lay that out there before we have the public hearing. And Mr. Chairman, I hope you will allow me to make some closing remarks after the hearing.
Hey, we'll definitely allow that. You need to come back more often.
No problem.
All right, we're going to start the public hearing. 3 minutes each, and first up, I can't read your writing. Okay. Proponent Lisa Tallwater. She's a proponent.
I brought today, also with me, Jesse Stockman, he is our captain of Kennedy Fire Department. And Jeff Bradford, he is our wildland specialist in Lamar County. Thank you for having me today. I come before you not as a lobbyist, not as a banker, as a volunteer fire department. Volunteer fire departments are built on sacrifice. We sacrifice our time. We sacrifice our sleep, our comfort. Despite all, we are still asked and forced with defying logics of banking. The issue today continues to prohibit us to use credit unions as banking for volunteer fire departments. Let me be clear. That is not a restriction that protects us. It harms us. This helmet is an example of how it harms us. This helmet needed to be replaced immediately. Not when it's convenient, not eventually, immediately. Because this helmet is the difference between a firefighter going home safe and a firefighter not. Because the current law forces us to conduct business in an adjacent town. That's 10 minutes. 3 houses could be fully engulfed. Three houses. And it is inefficiency and avoided obstacles to ensure our public funds are safe. We currently even harder justify with credit unions steps away from our bay door, visible from our station, embedded in our community, yet we are forced to use or forbidding to use. For this reason, that is not efficiency. That is not at all. We need flexibility when it matters. We need to have the ability to have shop the rates. When we have the ability to have the best rates, we can have better training, apparatuses, and safety. Allowing credit unions to serve public depositories is not a favoritism. It is not banks versus credit unions. It is fairness. It is stability. It is trusting volunteers to choose financial partners to best serve their operational needs in their own community. I urge you to remove the outdated restriction and allow credit unions to serve as a public depository for volunteer fire departments to stand with men and women.
Thank you, Ms. Thomas. All right, next up, opponent is Scott Latham.
Mr. Chairman, members of the committee, good morning. I'm Scott Latham, and I'm with the Alabama Bankers Association. I want to first express my thanks to the volunteer firefighters who are here. I grew up in a town that depends very much on a volunteer fire department, and I appreciate the service. When I first heard about this bill, someone told me that a volunteer fire department was miles away from its nearest bank and opted for a credit union that could not serve them at the time. That struck me as odd, although we just heard that can happen. I checked the numbers, and certainly while that sounds like it's the case there, Alabama has 1,347 bank branches within the 134 banks that service our state. Now, I hope you'll get this. That's more than the 975 Dollar Generals in the state, and there are verified 975. Yet credit unions have 548 locations. You have the maps that we provided you on the locations of those. During the Great Depression, the 1934 Credit Union Act was established not-for-profit institutions to promote thrift and provide credit to, according to the law then, people of modest means and underserved communities. We appreciate that and we applaud that. In return, however, they received a significant benefit, an exemption from federal and state income taxes. Fast forward to today. As of September 30th, Redstone Federal Credit Union in Huntsville is the third largest financial institution in the state, second only to Regions Bank and Service First Bank. Redstone held over $8.2 billion, and that's with a B, by the way, in assets and generated 87.7 million in net income in the first 9 months of last year. Of the top 10 financial institutions in the state, All-In Credit Union is number 5, America's First is number 8, and Max here in Montgomery is number 9. 4 of the top 10 largest institutions are credit unions. Those 4, according to the NCUA, posted 166.8 million in net income in the first 9 months of 2025. Across the credit unions, just under 100 of those in Alabama with over 38 billion in assets. That income number is a little over 301 million in that same period. No federal income taxes, no state income taxes, and no mortgage recording taxes, which really benefits cities and counties. Credit unions, as I understand it, do pay property taxes and are assessed financial institutions excise tax in Alabama, which is fractional of what the banks pay. In a 2019 study that we did at the ABA, for every $1 the credit unions paid in FIET, banks paid $12,500.
Thank you, Mr. Latham. Thank you. All right, next up, we have Joe Taylor, proponent.
Thank you, Senator. I'm Joe Taylor. I'm also the mayor of Rainbow City. I'm a 25-year firefighter professional, and I think this bill has more to do with retention and recruitment than it does anything. We know that our fire departments right now, our volunteers especially, are beginning to degrade and digress and regress as far as their membership is concerned. Our greatest concern right now is the ability for these fire departments to go out and find a way to do the one thing that these buildings are standing here for, and that's to create a competitive position for anyone that is using taxpayer money. I think that these fire departments have an incredible opportunity to be able to go out and create a competitive position so that they can take taxpayers' money that's being gainfully put together to protect our people. If we look at the 17,258 calls that I made as a professional firefighter, I cannot imagine why somebody would do this for free, but they do it every single day. And I believe, unless I'm mistaken, every one of the districts that are represented by the Senate and by this House have at least one volunteer fire department in it. And I think in that case, we're looking at retention. We'll never get that 19-year-old senior out of high school to want to come and ride on a 69 model fire truck, but they will come to that shiny new engine and find their way to be able to allow that to come into their blood and be a part of that brotherhood and sisterhood. I believe that now is a time, knowing that my professional fire department is in a position where we're using quite a bit of our effort out into the counties, for us to look at this as a retention and a recruitment bill as well as a competitive bill. And with that, I thank you for your time.
Thank you, Mr. Taylor. All right, next up, we have Jean Crane.
Mr. Chair, while the person is coming up, how many more do we have?
2 more. Welcome, Mr. Crane.
I'm Gene Crane with River Bank and Trust. We're a 20-year-old bank here headquartered in the Prattville area, a state chartered bank, and have over this time have grown to be statewide in presence from Huntsville and Florence down to the coast in Mobile and Baldwin counties. And I wanted to take just a moment and tie together the role of public funds, how they relate to the community banking space, and what we do with those dollars. Our bank has grown to $3.8 billion in assets over this time, funded primarily by our deposit base. That's $3.3 billion in deposits. And what we do as a community bank is pretty simple. We gather deposits from our local communities in checking accounts, savings, money markets, and CDs. And then we mostly deploy that to meet the loan needs of our customers, again, throughout the state. With us, public funds are about 20% of our deposit total. It's about $650 million. And they come to us through municipalities, municipal utilities, county commissions, boards of education, volunteer fire departments, and many others who are recipients of state funds. And all these deposits are covered by FDIC insurance, or more importantly, they're secured by bonds that we put into the state's SAFE program so that those are fully secured deposits. The dominant asset of our bank is our loan portfolio, as I mentioned. And the lending activity that we provide to support finance, to finance manufacturing companies, professional firms, lawn care companies, a significant presence in the farming space in Southeast Alabama. We couldn't do that without the deposits that we gather through these public funds. We also are an active lender as an SBA preferred lender. We've been a participant in the state's SSBCI loan program, which are other innovative ways that we're able to meet small business needs that might have some challenges to underwrite from a straight credit standpoint. When we have excess dollars in the bank that didn't get loaned, we'll put those in a bond portfolio. And for us, about $85 million of those bonds are in municipal bonds, issuances from throughout the state of Alabama. And we've also done a number of things in tax-advantaged financing structures that I'm sure a lot of you are familiar with. We have just in the last 2 years been the primary lender and investor in some Section 42 low-income housing development projects in Montgomery, Mobile, and Gadsden, which provided about 160 units of affordable housing that people needed in those communities. We do that as well through participating in the Alabama Multifamily Loan Consortium.
Thank you, Mr. Crane. Thank you. All right, next up, proponent, we have Rich Lindsay. Welcome, Mr. Lindsay.
Thank you, Mr. Chairman, members of the committee, for the opportunity to speak. This bill is, to me, about access and about competitive rates and good use of taxpayer and, as someone mentioned, privately raised dollars in the volunteer fire service. In addition to my role as the fire chief at our local fire department in Cherokee County at McCourt's Crossroads, I run a local business. I get great service from local banks at my local business and at my local fire department. There are firemen in this state that have to go out of town and even in a couple instances out of county to do business with a bank. They need the access to those banks. When a fire department treasurer or chief is having to take his lunch hour to do fire department business, he needs that readily available and accessible to him. Additionally, in the rare instance that fire departments, who I would like to say operate as efficiently as any other agency in this state using public dollars, turning $1 into 4, 5, 10, or 20 every time we get it. There's rarely an instance where there's funds to deposit. But in those cases where we're raising money for a truck over a 3-year period and want to put those saved funds in a CD, 1 or 1.5% interest makes a huge difference to us. That's the difference in having to have another fundraiser and take everybody away from their family on another event. So I don't think this bill is about banks versus credit unions. I think it's about fire departments being able to handle their funds responsibly and about allowing the convenience for the volunteers who are doing this out of their own pocket, taking off from work, having the best and easiest access to banks. I thank you for your time.
Thank you. All right, next up, opponent Hope Johnson.
Good morning. I'm Hope Johnson, chairman of, is better? Good morning. I'm Hope Johnson, chairman of Friend Bank. Friend Bank is a 4th-generation family business and one of Alabama's oldest community banks. Our main office is in Slocum, home of the Slocum Tomato, and we have branches in Hartford, Geneva, Dothan, and Newton. First of all, to our chairman and committee members, thank you for your service to our state, and thank you also for the opportunity to share some thoughts with you today. I can tell you that Alabama banks do oppose this bill. Currently, credit unions are not allowed to accept volunteer fire department deposits, and this should not change. Public deposits are extremely important to our banks across the state and the communities we serve. Our banks rely on these deposits to fund home loans, emergency loans, small business loans, and commercial loans. Public deposits are a vital part of lending activity every day at every bank across the state. Public deposits are the economic engine that allows our banks and our states to thrive. Our public entities, like our volunteer fire departments, provide essential services to our banks, our employees, our customers, and our communities. I say all that to say that our banks have a deep understanding and appreciation of the importance of public funds and public entities. Armed with this understanding, tax-paying banks across the state, not tax-exempt credit unions, are the ones who fund public projects at below-market tax-free interest rates. Tax-paying banks, not tax-exempt credit unions, are the ones who purchase Alabama tax-free municipal bonds. Tax-paying banks, not tax-exempt credit unions, are the ones who participate in tax incentive programs offered by the state to support economic growth and rural hospitals. Tax-paying banks, not tax-exempt credit unions, are the ones who pay taxes, helping fund roads, schools, and public services. Tax-paying banks, not tax-exempt credit unions, are the ones who years ago helped develop a centralized system for pledging and securing Alabama public funds. The system, known as the SAFE program, is still in place today. The SAFE program is one of the many things Alabama does well. As a member of the Alabama State Banking Board and the Alabama Bankers Association Board, I can tell you there is nothing more important to the economic health of our state than protecting the safety and soundness of our banks and our public funds. Changes like these proposed in this bill can start to chip away at the integrity of a system that has protected and benefited the people of Alabama for many years. Thank you.
Thank you. And thank everybody for coming and speaking today. We're moving on to the next one. Senator Stewart, I almost forgot you. Happy, golly, can't forget you on your birthday.
Yes.
You're back at the mic.
I just want to say thank you for your time again, and just want to remind this distinguished committee that, you know, we've heard a lot of back and forth today, and this is a lot of information to digest, and I just want to encourage the committee to keep an open mind about this legislation. And I just want to remind everyone that the volunteer fire departments, those are your constituents too. The credit unions, those are your constituents as well. And so we don't need to hamstring our volunteer fire departments as well. And I just wanted to just share that I celebrate my birthday all month. And so if you want to vote this out of committee later this month, you know, delayed is not denied. So I just thank you.
Thank you, Senator Stewart. Can't wait to have you back. All right.
Thank you. I just want to make a comment, and if at all possible, I have to acknowledge that I actually do have, Senator, 2 volunteer fire departments in my district, Adger and Brighton. And just as it's gonna be another week, is there a middle ground? You don't have to answer this, but is there a middle ground? Is there somewhere where the entities can come together where those folks that may not have direct access can have access? But also, when we look at the type of programming that is taking place, and acknowledging the benefit to the community there, is there a middle ground? Just something to think about. I said you didn't have to answer it now.
Oh,
Just
okay.
something to think about.
Well, yeah, let's think through that.
Yes.
And dialogue.
Thank you. Senator Singleton.
Yes, Mr. Chairman, coming from a rural area, we have to acknowledge that there are bank deserts out there. And I think the banking industry will admit that there are banking deserts. Their model is based on where they can go and get their best deposit. Some of these rural areas that Robert and I represent really doesn't have a bank. Credit unions are in our area, and that's what works for us. Because of all these dollars are not public dollars, they're, like they say, raising for fish fries. I know I go out and help, try to raise money for our volunteer fires. We give them very little money. As one man said, they take $1 and make $12 out of it, you know. And so I think that I know that's a slippery slope, that banks don't want to open that door, that if it's volunteer fire departments today, it may be rural schools tomorrow, it may be rural hospitals the next day. And this is what I think it's really all about. It's not about whether or not they can really, because if it wasn't the security, I wouldn't support it. The security is there. Really even not about the tax thing. You know, I think that they're worried about the slippery slope. And so I think that there's a balance. I can remember the day when big bank was against community banks, but now they're together. and they found a way to come together and make the banking world work. And I think that they can do and find a medium with these, where there are banking deserts to allow these things to happen. Thank you.
Thanks, Senator Singleton. All right, seeing no more further comments or questions, moving right on, SB 81, Senator Stutz.
Thank you, Mr. Chairman and members of the committee. And Mr. Chairman, I know we have a public hearing. After the public hearing, I too would like to make a closing comment. There are people here that know a lot more about this issue than I do, but basically this bill, I think, is something that the public probably already expects, that a good portion of your premium dollar goes to actually pay claims when you have a dental insurance claim. And in fact, that's not always the case. So this bill is to address that. And since we have a public hearing, I'll get out of the way and let some of the people that have negotiated on this bill and understand the issue probably better than me and probably better than most of you, I'll let them get up and speak.
Thank you, Senator Stutz. Do we have anybody else? We only have one proponent signed up right now. Let's see. Do we have any other proponents before we start?
Mr. Chairman, where they're coming, just a quick question, just making sure we're not voting on this today. I'm gonna have to step out, so.
We're not voting on this today, just having a public hearing today.
All right, thank you, Mr. Chairman.
All right, so first up, proponent Michelle Hubner. I hope I said your last name correctly.
Yes, thank you. Most people don't get it right. I appreciate that. Good morning, Mr. Chairman and committee members. I'm Michelle Hubner. I'm the Executive Director of the Alabama Dental Association, and I'm here to speak in support of SB 81. More and more dental patients are skipping or delaying care, not because they don't want it, but because their insurance does not cover what they need. Meanwhile, insurance plans are doing pretty well. This isn't how dental insurance is supposed to work. It's not sustainable, and it's not ethical, and it's not the future that we want to see for oral health in our state. Dental care is critical to overall health. Tooth decay is the most common chronic disease in children, affecting nearly half of all kids in the U.S., and in some communities it's as high as 72%. The numbers are a warning. Our system is failing families. Not because our communities don't care, but because this system is broken, and insurance too often stands in the way instead of opening the door. We believe in fair deals in Alabama, right? Well, for years, even decades, the value of dental insurance has steadily declined as costs rise and insurance companies refuse to keep pace, paying more and getting less. Premiums have gone up, but treatment coverage has gone down, and that same $1,200 that you got in 1990 is the same $1,200 annual maximum that you have today. SB 81 is a step toward changing that. Nationally, up to 40% of dental insurance premiums go to the insurance plan and not to the direct benefit of the patient. SB 81 mandates that a certain percentage of premiums go directly toward patient care. 75% for standalone individual dental plans and 83% for standalone underwritten group dental plans. This reform ensures transparency, showing patients exactly how their money is spent. It directs more funds to essential care. It reduces delays and expands access to necessary dental treatments. It requires reporting of the loss ratio to the Alabama Department of Insurance and requires refunds to patients if insurers fail to meet that DLR standard or loss ratio standard. It's a basic accountability measure, one that already exists for medical insurance and one that dental insurers have avoided for way too long. The big picture in our state supports the critical need for insurance reform. We are in a crisis. Dental workforce shortages are critical. Alabama ranks among the worst in the nation for oral health outcomes, and Alabama has one of the nation's lowest dentist-to-patient ratios. Many rural areas rely on aging dentists who are nearing retirement. That went by really fast.
It goes faster than you think.
Thank you. I do hope that you'll vote in favor of your constituents and in favor of what's right. Thank you.
Thank you.
Who are you with? Excuse me.
Alabama Dental Association.
All right, next up, Deborah Miller, opponent.
Thank you, Mr. Chairman, members of the committee. I'm here on behalf of the National Association of Dental Plans. And while the intent may be to improve value for customers and consumers, the practical impact would be reduced access, fewer choices, and higher costs for Alabama families. Today, the average dental premium is around $27, and the premiums have only increased about 1 to 2% nationally over the last decade. This is according to the NADP member data. At 83%, this would leave about $4 for the administrative costs of a plan or implementation and compliance with an insurance department. This bill would disrupt the market and make it harder for Alabama families to maintain coverage. We don't have to speculate about the risk of this bill. We have something to look at. We can look at Massachusetts. Massachusetts is the only state that has enacted a medical level loss ratio for dental plans. Since passage in 2022, the state has seen nearly a 30% reduction in carriers offering dental plans. That means fewer choices for your constituents and fewer choices in the state. If Alabama adopts a similar mandate, we should expect higher premiums, fewer plan options, carriers leaving the market, and ultimately fewer Alabamians with dental coverage. And that matters. Thank you, Mr. Chairman.
Thank you. Next up, Chad Gray. Opponent.
Good morning. My name is Chad Gay, principal of Cahaba Benefits Group in Birmingham, Alabama. I've worked as an independent benefit consultant for 20 plus years, primarily focusing in the small business sector, 2 to 50 employees. I am also the legislative chair for the Alabama chapter of the National Association of Benefits Insurance Professionals. I manage employee benefits programs for 250 small businesses in our state, approximately 4,000 employees and their families. Benefit programs consist of a variation of insurance products: health, dental, vision, life, disability, critical illness, and accident. My job is to advocate for my customer, the small business, which is why I'm here today. It is my job to listen to my customers' needs and navigate the insurance market to provide benefit options that they feel are best for their employees. Being an independent benefits consultant since 2006 has allowed me the privilege to assist my customers during the turbulent and uncertain times, such as the Affordable Care Act. Included in the ACA legislation enacted in 2014 is the medical loss ratio of 85%. The negative impact: higher premiums along with higher deductibles and out-of-pocket maximums for employees. My concern with the DLR legislation is that 62,000 small businesses in Alabama, from 1 to 20 employees, will experience a similar result as the ACA has delivered: increased premiums and fewer dental carrier options in the state. The DLR has been enacted in Massachusetts. Yesterday, I reached out to Massachusetts benefits consultants to get a perspective on what impact the DLR legislation has had on the individual and small group dental market. Here's what I learned. 30% of carriers have left the small business and individual market, including major carriers such as Principal, Altus, Guardian, and Delta Dental. First year, there were no big changes in the rates. Second year is where they started to see the rate increases, and they expect to see that trend continue. One gentleman stated that something very interesting happened that he did not see coming. Prior to the law passing, the majority market share health insurance carrier, who also sells dental plans, was not that competitive in the dental market. After the law passed, the health insurance carrier became much more competitive with their dental premiums. It was explained to me the reason for the edge in pricing is because they are blending their dental plans into the medical plans. They did not have to follow the same DLR rules all other dental carriers have to abide by law. Due to this unfair practice, he stated that he expects Massachusetts will continue to see dental insurance carriers exit the market. Thank you.
Thank you. All right, Senator Stites.
Oh, sorry.
Sorry, I thought we were through.
One more.
Excuse me, Senator Stubbs, we have one more speaker.
I know we're eager to get out. No.
Jonathan Ratliff.
Yeah, Chairman, members of the committee, it's good to be with y'all. I was here with y'all last year, and just by way of background, I'm Jonathan Ratliff. I run a fourth-generation family business called Collateral, based in Birmingham. I know the chairman runs a tight clock, so I'm going to read the script, but I'm happy to answer questions at the end. We employ roughly 300 people, and through our operations, oversee dental plans for about 300,000 Alabamians. I want to make 3 simple points about the proposed dental loss ratio. No jargon, no math, just common sense. First, and most importantly, this policy will drive up the cost of health care. When government mandates a fixed spending percentage, it disconnects price from competition. If an insurer must spend 83 cents of every dollar, the incentive to lower premiums or even hold them steady disappears. This concept is actually the cornerstone of the Affordable Care Act, and it is also, frankly, its greatest flaw. Regardless of where you stand on the ACA, I would ask you to decide whether that is the market outcome you want to replicate here in Alabama. Second, here in our state, we believe in competition, not mandates, as the solution. If underwriting dental insurance at an 83% loss ratio is sustainable, nothing prevents anyone from starting that company today. Alabama law already provides the ideal structure, the Dental Service Plan Corporation. It allows a plan to be launched with minimal upfront capital and far less regulatory burden than a chartered insurance company. I know this firsthand. I started one in 2019. If this model works, the market will adopt it. If it doesn't, the state should not require every other carrier to fail alongside it. Our counterparts understand this option. The lack of participation speaks for itself. Third, we work every day with employers and brokers like Chad, the actual consumers of this product. We have the support of the broker community and many of the employers they represent. They're not asking for a dental loss ratio. They're asking for lower premiums and more choices. This bill delivers neither. Finally, I'm here. I want to be transparent. There is a narrative today that insurers are sitting on a pot of gold. Here are the facts. Over 5 years, we've invested $3 million. We've written $30 million in premium. We don't have elaborate corporate headquarters. We run lean corporate staffs, all here in Alabama. To date, over 5 years, our collective loss is $68,000. These are all publicly reported filings to the NAIC. If this DLR had been in place when we chartered, our cumulative losses would be $5 million. A mandate like this just doesn't skim the cream. It drives competition out of the state. In closing, the dental loss ratio is a blind instrument and the worst element of the ACA to cherry pick. It harms competition, raises costs for employers, and ultimately hurts patients. Competition disciplines prices, mandates do not. We already have a decade of evidence with ACA. Thank you.
Thank you. Senator Williams?
Yeah, if there's anybody here from the Department of Insurance, I'd like to hear if they have a statement. They didn't sign up, but position on this bill.
I think Mr. Ratliff was really eloquent there. I'm Ren Norman from the Department of Insurance. We don't really have a position on the bill, but economics are economics. And when you go squeezing the economic balloon in one area, it flows up in another area. And the Affordable Care Act, the federal government basically is providing insurance in the Affordable Care Act, unless the state plans to start subsidizing dental insurance. I don't know why you would pick that one. I thought Mr. Ratliff's illustration was really good. We all love our dentist. I mean, I love my dentist. I suppose all of you do. So I don't want us to appear that we're taking sides against our dentist. But I don't think this is the right way to go. It's going to lower competition. It's going to reduce the number of companies marketing. I mean, I don't think he wants to willingly give away $5 million. Willing to risk the $68,000, which I assume he thinks he won't do that in the future, and he will eventually start making a profit. It's a business. These people are investing their personal money to make a business, just like our dentists are doing that. And so we need to find them a way to be profitable as well. But entering mandates for health insurance is just not the way to go.
Senator Smithman?
I'll say this, I think you have to do everything, but I still need to ask the question, when you say mandated, what do you mean?
Well, this has got a medical loss ratio requirement that you have to
And what
spend
premium
so
is that?
much.
Yeah, go ahead.
So much of a premium dollar coming in has to be spent on claims, is that basic idea?
No, on care, direct patient care, not claims.
Well, I'm sorry, maybe you should ask her.
No, I was asking you, I'm not that, I wouldn't ask that, but I don't prefer to at this moment.
So what's left is 15% to run the company.
And
You
what
have
are
to
we
spend
trying?
85% on care.
Okay.
Then you've got, that only leaves 15% to run the company. Doesn't work for regular health insurance without the federal government subsidizing.
So does this bill say that it's got to be 85%? Is that a exact percent in there?
83, I think it's 83, I'm sorry.
83. So 17% to run the business and 83% to provide the services for the people. That's what this bill says. Now, now, what is the standard now? What we under?
There is no medical loss ratio requirement for dental insurance. There is for Affordable Care Act.
And what is that ratio for Affordable Care Act?
I think it's 85% for some, and there might be health experts that are better at it. But the premium is so high that folks can't afford the Affordable Care Act unless they qualify for a subsidy from the federal government. Very few private citizens go in and spend their own money for the Affordable Care Act. And you know, under the COVID Act, they gave additional ones, so a lot of additional people signed up. And those went away this year.
That's what Congress is trying to get back and forth about the
Potentially
subsidy.
they're gonna put some more subsidies in, which would be fine. It's just,
Well,
the federal government paying for that. The federal government's not volunteering to pay for this, I don't think.
but even though the federal government is not paying for it, they still have to provide 85% on the ratio because that's the law,
Because
right?
the insurance company does.
Right, so Affordable Care Act, federal government has nothing to do with the requirement that they have to provide the 85%, is that correct? But for the insurance.
Well, under the Affordable Care Act, those policies have to meet the 85% loss ratio requirement. And if they're below that, then they have to make refunds. So they're gonna meet the 85%, one way or the other.
All right, but the policies that are not under the Affordable Care Act have to.
They do not.
They don't have to provide an 85%.
They don't, but there are other policies that have similar requirements. Medicare supplement insurance has a loss ratio requirement, which is of course, it goes along with your Medicare policy. It has a medical loss ratio requirement.
And that part, once again, is what they're trying to do in the bill to provide, and correct me, I'm just trying to get understanding, they're trying to provide, they're saying in this bill, we want that if a dollar comes in, we want 85% of that dollar, 83, whatever it is, to go to services. Is that correct?
Go to care.
To care for the person. And we're saying the amount over here that you can make the profit is 17. In this case, it'd be 17.
Not profit, it's to run the company.
That's, well, I mean.
Profit would be included in that.
I understand that part there. Then, let me ask the question, it's a general question. Have y'all looked at a different percentage other than the 85? I'm not you, thank you very much. I mean, you know, as a compromise.
Let me address that. The 75% for individual plans, these were negotiated numbers. They started off higher, started off at 85, and 83% and 75% were the numbers that were agreed on. And as I've heard these arguments, and I appreciate what they say. And I'm generally not trying to mandate anything. I'm saying what consumers actually see is that they don't have good dental insurance coverage. What the dentists are telling you is that people come to their office all the time and, oh, I've got dental insurance, but it doesn't cover hardly anything. It doesn't provide the services that they need. And so the genesis of this bill is simply saying that the consumer expects that a significant percentage of their premium dollar is going to cover the services that are needed. And as he pointed out, mandating a medical loss ratio is not new to the system. This dental loss ratio is simply mirroring what happens with you expecting a percentage of your premium dollar to go to the services that you need. And in a lot of cases, it does not. But I'll be glad to try to answer any other questions. Mr. Chairman, I am in favor of efficiency. If you want to vote this out using the previous role.
I appreciate it. It looks like we lost the previous role. So thank you, Senator Stutz, and thanks to all your members. Thanks for everybody. We are adjourned.
Thank you.
This is what I was saying.